Hey, what is going on everyone? Welcome back to another trade recap video. In this recap video, I want to talk about a trade I took yesterday, 2 positions on GBPCAD, resulting in me negative 2%, just over negative 2% on my account. So I just want to drive home a point that as traders, we're going to take losses. It's going to happen. But these losses have taught me to be much more selective in my trades. In hindsight, looking back at them now and reviewing it, which we'll go through the analysis in a minute, I could have avoided this trade if I was just a little bit more selective. For me, taking the win on EuroCAD on Wednesday just over 1.6%, I got emotionally driven to make more money. I came to my trading desk yesterday feeling on a high, on a rush, feeling, very confident, and just kind of my ego took over and I just wanted to be involved in the trade because I wanted to make money. It's as simple as that, looking back in hindsight. So I'll show you my P&L. Sorry. So just over here, we got minus 1% on, minus 1.10% on the, I think that was the second trade I took. This trade wasn't emotionally driven since I lost 1% on my first trade. I wanted to regain that 1%, but in hindsight, I shouldn't have even taken this trade. So going forward, this is just, it just clarifies to me that I have to be more selective. I have to be more mindful of my trades, and I just got to approach. The goal is to be unemotionally attached. You got to be like very unemotional towards your trading, and you just got to detach yourself from the emotions. I'm very much process driven, but when I take a win, this is something I need to admit. When I take a win, I get really like ego driven. It just makes me excited. So let's jump to the chart analysis and I'll show you guys what I was looking at. So as you can see, this was Thursday, the 27th of August, 2020. You can see the period separators here. This was Wednesday, Monday, you get the idea. So yesterday, coming and doing my analysis, I noticed price was making higher highs and higher lows. We found this zone of price sensitivity where we couldn't break it, we rejected off, and coming into today, we tested it twice, tested it again, came down to the 50 EMA, broke it, couldn't hold it, and then we came up and we broke out of that price resistance zone. This is when I got interested in taking long positions because I was looking for a pullback to the 50 EMA and I was looking to take it long. Now, in hindsight, doing my analysis, as you can see, this purple bar, we got the higher price action made a higher high, but the RSI made a lower low, giving us bearish divergence. Now, this signals to me that we could see change, or we could potentially see sideways movement or choppy movement. Now, seeing these wicks to the upside, holding this level of price sensitivity and this divergence, I shouldn't technically have taken this trade. I'll show you where I went to get enter on the 1 minute. So on the 1 minute chart, way too far over here. So I was looking at right here. So as you can see, we had bearish divergence here, which gave me an indication that we could see a move off this 1 minute 800 EMA to the upside. So I took my initial position when we broke up and we retested. So price made a higher high and a higher low. So as we came in, as this trade progressed, I was looking at the L50 in the buy zone, coming into the buy zone, price moving up, making 1 minute price action structure. I got involved in this trade at this point here. Whoops. And I had my stop just down there. Now, ideally, I had my stop a little too tight as well. Looking at it back in hindsight, I should have had it a little bit lower, but either way, as you can see, the trade fell. So regardless of where I put my stop, I would have been stopped out anyway. So as price made the higher high and the higher low, I got interested in taking my position as the kind of started ranging. I was predicting a move to the upside, and we started to break out here. So as soon as I took my position, we got into a little bit of drawdown here, and I was pretty much in profit. And then as it progressed, I got stopped out. So as I was saying before on my P&L, the first trade was like, I was probably about 16 minutes or so in this trade, and it kind of stopped me out. So overall, I believe I read it right, but I could have been way more selective. The divergence is weak here. I should have waited for another higher high and, you know, another retest of that low. What made me get involved was this zone here where we came back down and tested that lower low and we couldn't break it. So that's when I was like, okay, looking for my position. I took the entry, put my stop in, and we just got stopped out. At this point, taking that 1% loss, coming back from my 1.6% winner, I was like, holy shit, kind of getting emotionally driven, which as a trader is really, really bad because you make silly decisions like this one. So I then proceeded to come back to the 15-minute chart, and I saw this free candle formation, which is the A1 signal that we are taught in the ASFX system. And I kind of just went for it. And in hindsight, it just wasn't a good formation. Looking back at it now, I shouldn't have even been in this trade. I took this trade, and as you can see, 4 minutes, negative 1.10%, just stopped me right out as soon as I entered. And looking back at it in hindsight, like I was saying, I could have been way more selective in these trades. So yeah, so that's my recap on GBPCAD. Just to get and drive home the point, as traders, we don't have to trade every day. I'm coming from this 9-to-5 mentality where we're, you know, paid wages for a living. It's consistent when we do the work. When you're trading, it's total opposite mindset shift you have to get yourself into. And I just think trying to make money every day is not what you want to try and do in trading. You just have to follow your trading plan, follow your rules, and just be selective. There's always going to be opportunity in the market, especially as a day trader. These signals present pretty much every day. It's just a matter of picking the highest probability trades. Like in hindsight, looking at it, when I took this trade, I traded straight into divergence, straight into resistance. Like there was just a lot of knocks which, you know, lower the probability of our trades that I shouldn't have even been involved in. So lesson learnt. I've reviewed them, I've printed them out, I put in my trade plan, and I'm just going forward, just being more mindful, being less emotional driven, and just really got to collect myself. So I hope you guys got some value out of this trade recap, and just going forward, you know, as traders, I'm probably going to make 1 or 2 mistakes like this again, but hopefully I can catch myself, be more mindful about it, and pick higher probability setups that will keep me out of lower probability trades. And like I was saying with this trade too, I had it went long. I had the direction right. I was just super early in my entry. You know, we broke straight down in one bar, breaking the 200, breaking the 800 EMA, and we held the 800, couldn't push lower, got this pin, and it kind of just broke up, retested the 800, and then it shot back up. That was the move. This move here was the move I was looking for over here, and unfortunately it just didn't happen. We had a few red folder news events, we had Fed Chair Powell speaks, and we had this event here as well. So a lot of volatility in the market yesterday, and just could have been avoided, but that's trading. Lesson learnt, all good, no harm done. I'm, you know, only down 1% for the whole month. in terms of anything that is nothing. And as traders, we do not focus on days. We do not even focus on the weeks. We should be focusing on quarters of our returns, because all it takes is one good trade and that's my account back in profit. So I hope you guys got some value out of this, and I'll see you guys in the next trade recap.